1. Income statement. The income statement, also called the profit and loss (P&L) statement, summarizes a company's financial performance over a specific period, usually a quarter or a year. It shows how much revenue the company generated, what expenses it incurred, and the resulting net income, profit, or loss. Key elements: revenue, the total amount of money earned from sales of goods or services. Cost of goods sold, COGS, the direct costs associated with producing the goods or services sold. Gross profit, revenue minus COGS. Operating expenses, costs incurred in running the business, such as salaries, rent, utilities, and marketing. Operating income, gross profit minus operating expenses. Net income, profit, or loss. The final result after all expenses are deducted from revenue. 2. Balance sheet. The balance sheet is a snapshot of a company's financial position at a specific point in time. It shows what the company owns, assets, what it owes, liabilities, and the value of the owner's stake in the company, equity. Key elements: assets, resources controlled by the company that are expected to provide future economic benefits, e.g., cash, accounts receivable, inventory, equipment. Liabilities, obligations that the company owes to others, e.g., accounts payable, loans, bonds. Equity, the owner's stake in the company, representing the residual value of assets after liabilities are deducted. 3. Statement of cash flows. The statement of cash flows tracks the movement of cash into and out of a company over a specific period. It categorizes cash flows into 3 main activities. Operating activities cash flows, related to the company's core business operations, e.g., sales, expenses, interest payments. Investing activities, cash flows related to the purchase and sale of long-term assets, e.g., property, plant, and equipment. Financing activities, cash flows related to the raising of capital, e.g., issuing debt or equity, and the repayment of debt. 4. Statement of retained earnings. The statement of retained earnings shows how much of a company's net income is retained in the business and how much is distributed to shareholders as dividends. Key elements: beginning retained earnings, the amount of retained earnings at the start of the period. Net income, the profit earned during the period, from the income statement. Dividends, the amount of profit distributed to shareholders. Ending retained earnings, the amount of retained earnings at the end of the period. In summary: income statement, how much money the company made, profitability. Balance sheet, what the company owns and owes, financial position. Statement of cash flows, how much cash the company has and how it's used, liquidity and funding. Statement of retained earnings, how much profit is kept in the business, growth and investments.